Hi, Mahesh, we can start.
Fine, just another 2 minutes more.
Okay.
The response also come from monthly. Yes, now. This project, the response. Yeah. Yeah. Yeah, sure.
Yeah, let's kick start. Okay. Hello.
Yeah,
Hello,
I'm
Sam.
there. I'm there.
Yeah, Samuel, you're there.
Yes, I'm there.
Yeah. Okay. Hi. Good evening to all. Thank you so much for taking out time attending this event, which we are trying to do currently. Let me introduce. I'm happy and pleased to introduce Mr. Rahul Singh. He's a fund manager for the Tata Multi-Cap Fund. Also, he's been there working with Tata from 2008 as a CIO equities as well as equity fund management and equity research stream he's handling. In this, he got overall 26 years work ex and worked in Standard Chartered Securities, Citi Global Markets in India as a head of equity. And also he got here's IIT Bombay, IIM Lucknow, as well as his did in Master's Business Administration and Financial Services. We'll be glad to hear from Mr. Rahul Singh saying about the little outlook on the market, about why multi-cap fund at this market level, earnings seasons are there, globally things are here and there are there. Then apart from this, China is also something like, which is opening up. A lot of things are going on in the overall. And at the same time, it's we also feel that it's a good time to get into this Tata Multi-Cap Fund. And we will over to you, Rahul, that in terms of overall outlook, why an equity market, why multi-cap at this current juncture, how you're going to be different for our clientele. So over to you.
Thank you, and good afternoon, everyone. And what I'll talk to you about is just very simply why multi-cap as a fund, as a scheme makes sense in this market, and why Tata Multi-Cap. So firstly, why multi-cap funds make sense today is primarily for two reasons. One is that today, if you see, while the markets are little expensive and India is more expensive than rest of the world, as an economy, I think we are going through a period where there is a shift happening from consumption cycle to investment cycle. We have been primarily a consumption-driven economy last 8-10 years. Now we are making a transition towards investment cycle-driven economy. And I think that when that happens, typically what happens is that there is a broad basing of the market. You will see that the sectors which do well in a cycle where there is an investment recovery or capital investment recovery are very different from the companies which do well during a purely consumption driven economic growth. And therefore, what is happening now is that we see more companies in the manufacturing, capital goods, industrials, power sector, etc., also doing very well in terms of their fundamentals as compared to only consumption. And as you would know, and as some of you would know, but even if you don't know, the participation of just one second. The participation of of mid cap and small cap is much higher in the participation of these sectors is much higher in the mid and small cap space. And that is something which makes multi-cap as a good option, because multi-cap, as you would know, includes 50% large cap, 25% mid cap, and 25% small cap. Roughly speaking, our large cap can be even lower. We can even have higher percentage in mid and small cap. But typically, just to make it simple, it will be 50, 25, 25. So what happens in multi-cap is that you are constantly looking for new ideas, growth ideas in the mid and small cap space. And today, because of the change in the economic situation and the fact that we are moving from consumption towards investment, I think it's a very good time for mid and small caps to also find growth opportunities and for us to find good ideas specifically in the small and mid cap space. So this is why I think multi-cap makes sense. The other second thing which is happening in the market today is that there is a lot of valuation discipline which is coming back. Last 8-10 years has been a period where growth quality got valuations which did not make too much of sense. Now we are seeing more sense coming back into valuation. So both these factors combined together makes multi-cap an extremely good scheme to try and generate outperformance to generate alpha. Now that's really why multi-cap, and this goes completely different. This has to be a completely different debate from what the market levels would be in 1 year, 2 year, 3 years, because I think the market is going through a significant change. The economy is going through a significant change, and therefore, even if index gives you 5-10% CAGR returns over the next 3 years, which is probably possible, there are sections of the market which will do extremely well. There are sections of the valuation or the philosophies or investment styles which can do really well. And therefore, we are very confident at Tata Mutual Fund that we'll be able to beat the index in that kind of a market, especially in a multi-cap scheme, because the economy itself is becoming conducive to multi-cap. That's on why multi-cap. On the second part, which I thought I'll touch upon, is why Tata multi-cap. Now there are three simple logic as to why Tata multi-cap. One, we are obviously building the portfolio from scratch. We have the advantage of knowing which way the economy is going. We don't have any legacy issues, so we can build a portfolio purely on a fundamental bottom-up basis, and we will take 2 to 3 months to build the portfolio so that we get good entry points, we get good points in the market where we can build our portfolio over the next couple of. That's point number one. Point number two is that at Tata Mutual Fund we have a style which is a combination of value and growth. So we are very valuation disciplined. Our starting point of picking or buying any stock or sector is how's the valuation compared to the 10-year history, and if it's at a mean or a 10-year or discount to mean, that becomes the starting point for us. But we also look for growth. So at that point of time, if the growth is going to come back, then can the market re-rate, can the stock re-rate? I think those are the opportunities we look at. And therefore, this kind of a market, which I mentioned that because of the high interest rates, there is valuation discipline coming back, I think it's a great market for fund managers like us or for investment philosophies which are more valuation focused as compared to philosophies which are, growth at any price or quality at any price valuation. So that's point number two as to why Tata Multicap. The third point I would like to say here is that we are not just looking at our style and saying, since we have a combination of value and growth, we'll automatically do well. We are going to be very, very focused on what kind of companies we buy. So for that, we have made a segmentation of three types of companies which we'll be buying in this portfolio. The first part, which is called earning stability, which will be about 40% of the portfolio, is about combining companies at a fair value, but with a fairly high degree of uncertainty on what kind of earnings growth we can get from there. So if it is 12% growth, 15% growth, even if there is a valuation decline, we can still get a 10% CAGR returns from this part of the portfolio. That's called earning stability. That will be about 40-45% of the next 40% will be what we call as earning upgrades, where we'll identify companies which are in the middle of or the beginning of an upgrade cycle. Today it's happening in some private banks. Today it's happening in capital goods and industrial space and manufacturing space. And these sectors will keep changing. We keep finding new sectors. Tomorrow it could be IT, day after tomorrow it could be pharma. So we keep ideating and keep finding new sectors where we think we can get the benefit of growth surprises and also the valuation surprises. The third segment of the portfolio is what we call as earnings turnaround, where we will take advantage of companies which have done very badly in the last 2-3 years, but the valuations are such that from there we can, if we can have a thesis that the earnings can turn around, then we can maximize our alpha. So since this is a higher risk part of the portfolio, we will have only 15-20% of the portfolio in this. And we'll also spread our bets over 15-20 names. So we will not have concentrated bets here. We will not have more than 1-1.5% in each stock in this part of the portfolio. So as you can see, we have earnings stability 40-45%, which will give us a stable return. We have earnings upgrades, which will give us moderate alpha, but where we have more evidence of upgrades happening. And the third part is going to be earnings turnaround, where we don't have evidence of a turnaround, but the valuations are such that if our thesis is right, we can maximize our alpha. And here we will have less concentration, and we will have, we will spread our bets so that our risk is minimal. So that really, in sum and substance, is our logic for Tata Multicap. So just to repeat, why multi-cap today? Because economy is going through a transition towards investment cycle, which typically is good for mid and small caps. And secondly, markets are becoming more valuation conscious, which will not only help us in generating alpha, but also for Tata Multicap, with our philosophy, I think we should, we are better placed to make sure that in this kind of an economic situation, we are able to create a portfolio which is well positioned to create outperformance over the benchmarks. So I wanted to keep it short, and I'm sure there are questions on the fund or on the market. Please feel free to ask me anything which you have in your mind, either on the market or on the multi-cap. Yeah, over to you, Mahesh.
Yeah. Hi, Rahul, thank you so much for this. And basically, as you told, from my end, I just wanted to ask for a client currently have some existing multi-cap funds, and now what the current your fund is going to be there. What do you recommend for a client? What is the time frame that he need to look at this particular fund? And also, a lot of people feels that small cap is a good time to be invested, but view on mid cap and the large cap space, it is a good time. That's something that if you can cover.
Yeah, so I think time frame has to be 3 years for this kind of a fund, because we are trying to build a portfolio which also has turnaround candidates, which typically will take 12 to 24 months. So unless you get 2 cycles of those investments, you will not be able to maximize returns from that. Similarly, if you have, what was your second question? I forgot.
Hello.
Yeah, your second question was what?
No, no, why? Because everybody
Small
feels
cap.
that
Okay.
small cap is good
Yeah,
time
yeah,
to
yeah.
invest it, but it
Yeah,
is
yeah.
got a mixture of between mid and
See,
large. Yeah.
I don't think in terms of small cap, mid cap, and large cap. See, I think what we have to realize is that multi cap is primarily a bottom up approach, right? And therefore we anyway have to keep large, mid, and small in certain proportion minimum. And I think large cap is we find good opportunities in large cap as well. It's not that we don't find good opportunities in large cap. Mid caps are a little bit more expensive. So in mid caps, we'll have to buy companies where we'll have to have a good valuation discipline. And we also probably will have to buy in mid cap companies where we get some stability at the same time, moderate alpha. I'm not expecting significant alpha from mid cap at this point of time. But small cap and large cap, I'm still optimistic.
Yeah. Just for thanks, Rahul, for this. But sir, for the client's benefit, request you please type your questions in Q&A session so that we will answer one by one. There's a multi-cap fund is not done good from the last 18 to 24 months. Will they get changed in the next 24 months, Rahul?
I think so. That is what I was saying in my initial part, and I gave you the logic for why I think the next 2-3 years will be good for multi-cap.
Okay. Do you recommend SIP or a bulk investment in this?
I would say since we are anyway going to take 2 months to deploy, maybe 50% lump sum and 50% in a staggered manner is a good idea.
Technically, one more question from my end, Rahul. Lot of people feels in the market next year earnings are not going to be to that extent. Market will be very volatile, and because in that during anywhere your strategy is to bottom up picking up these stocks. But what do you feel on this particular view? Like earnings are not going to be that great. General elections are there. State elections are going to be there. How do you think that you can construct a portfolio? How do you look into the client's money so that it will be taken care over a period of time?
So as I mentioned, we will deploy over 2 to 3 months. So that's the first thing. And secondly, I explained in detail how we will construct the portfolio in terms of those 3 types of companies: earnings stability, earnings upgrades, and earnings turnaround. So we are trying to create some stability and at the same time try and create alpha. And also deploy the funds in a gradual manner so that if there is a volatility in the near term, I'm talking about next 2-3 months, we can take some advantage of that.
Okay. Okay. Thank you so much. There's one question has come. Do you think smaller companies will do better than large cap? Or hence, why not a mix of mid and small cap funds than pure multi-cap? Will large cap create a drag in the your portfolio?
No, I have already answered that. I think large caps are looking good. Also, I think mid caps is where the choice is limited and the valuations are little rich. But both large cap and small cap are not going to be drag. Large caps are not going to be a drag, that I can tell you.
Thank you, Rahul. One more question is, valuations are looking high at, is it the time good for the portfolio construction?
Yeah, it's an excellent time because we are also getting a lot of volatility on a day-to-day, on a weekly basis. So markets are moving sideways with some small corrections. So we have to be patient, and we have to be patient. Like I mentioned, I keep mentioning, like next 2 to 3 months, we have to be patient, and we can. My belief is we can build a portfolio gradually if we have our basic thought process in place, which is what I tried to explain about those three types of companies.
Yeah. Thanks, Rahul, for that. We'll wait for further questions from the client. 1 minute. Do you really feel is that some impact will be there in India, like China is getting opened up now in terms of?
Yeah, it's already happening. So obviously China opening means some of the premium we had will reduce, valuation premium, but it is not going to collapse because our economy is also doing well. So let's not forget that China has not done well for last 3 to 4 years. So there is some bounce which is likely to happen in China, and that's a healthy thing to happen. I don't want India's valuation to become so high relative to China that we create a bubble. So what is happening, I would say, I would take it as extremely positive for the long term for Indian markets, because otherwise, if China was not doing well, China had not unlocked, then our valuation will continue to run up, and that's never healthy. But then we create a peak and a bubble. So let us not worry about China too much. What is happening in China is actually, I would say, a good opportunity, positive thing, so that the valuations remain here for some more time. We cool off in valuation and we get good time to build our portfolio.
Okay. One more question from Anand. How do you read this layoffs globally? What's happening? How it's going to get impacted? Our second is how do we read this recessions? What they are talking about? Do you really feel that is going to happen and the impact will be there?
Nobody knows, Mr. Reddy. Nobody knows whether recession will happen or not. Even Federal Reserve does not know. So we have to be watchful of the situation in the US and UK. And what the Federal Reserve is trying to do is create a shallow recession, a recession which is gradual and trying to prevent a inflationary spiral. And the only thing we can hope for is that they are successful in doing that. So far, they seem to be succeeding because inflation is cooling off gradually, slowdown is happening gradually, and layoffs are a part of that. If you look at these companies, they are laying off what 3-5% of their work. If it was 20-30% of their workforce, then we would need to worry. So I think so far the Federal Reserve seems to be succeeding in creating a slow, shallow recession, and hopefully they continue on that path.
Oh, okay. There's a couple of questions in the chat box. There are so many existing multi-cap and other AMCs. May I know the unique features and the benefits of this multi-cap, and why customer is raising this concern is NFO is always a costly to the investor. What is your view, Rahul?
So I already in detail answered that question. I anticipated, then I have already answered that question. So if you want me to repeat, I'll repeat. But in short, I think we have the advantage of deploying it in a period when there is volatility. We also have a philosophy which is more valuation discipline. So I think that style is going to work in a market where interest rates are going high. And third thing is we have made a portfolio approach where we'll buy 3 types of companies for stability, upgrades, and turnaround.
Okay. Thanks, Rahul. One more question on this global recession fears. Fears are now overdone and the fund flows will begin into emerging equity markets?
I hope so. I hope the answer is yes to that. But as I mentioned earlier also, Federal Reserve seems to be succeeding in doing that. And if they do that and they start cutting rates sometime in 2024, it will be negative for the dollars, positive for the other currencies, and therefore emerging market flows in 2024 should definitely go up.
Okay. There's another question here. Once we invest into the NFO, what will happen to our investment until deployed in the next 2-3 months time frame? It will be invested into any liquid fund?
Yeah, it will be invested in what we call as call money market and the TREPS market. So you earn about 5.5 to 6% a day.
There's another question here. Looking at the current market scenario, is it the right time to invest? Reasons being, from the last 1 year, market is roaming around 18K. It's not moving up, neither moving
So
down.
I've already answered that question multiple times. I think we should stop looking at the market because what is happening in the market is a function of so many things, like what is happening in China and so on. But what I can tell you is that from an economy perspective, things are changing from just being consumption driven to investment driven. And that creates opportunities for fund managers to do bottom-up portfolio construction, which I believe is the only solution to a market which is roaming around in 18,000. Because if we do bottom-up selection, in fact, what I should highlight is that you should look at the performance of some of our other funds, Tata Group funds, whether it's Tata Business Cycle, small cap, large cap, focused, tax savings. You can see that we've been able to beat the market or beat the index. Last year, the index has also been flat last 12 months. But we have been able to generate returns, 5-10% above that. So this year is going to be no different. So that's why I'm actually quite optimistic, and we actually like this kind of market which roams around a certain level, gives opportunities for fund managers to pick stocks and generate returns which are better than the market.
Yeah. Thanks, Rahul. One more question here regarding to this, again, not to that level. In Karnataka, elections are going to be in the month of May. What will happen, impact on market if BJP loses the election? Or we can also look at, state elections are going to be there till December. Like Telangana, all other states are going to be there. Anyway, general elections are going to held in May in 2024. What will happen if this state elections are going to get negative towards BJP? What will be the impact on market?
I don't want to comment because I really don't know. It's a hypothetical question. I think the market is more focused on the general elections, and more importantly, general elections are at least 15 months away, 16 months away.
Yeah.
There are so many other important events like global recession and what kind of global recession, etc., is there, which are much more important than general elections. I think general elections are probably the least risky thing right now in my mind.
Okay. One more question here, Rahul. Is there any sector that you are bullish on?
I already mentioned it's banking and manufacturing and capital goods.
Okay. There's a little bit more on that. Small and mid caps, good prospects in the next couple of years. Is that their fortune depends on large companies to which they supply products and services? Example, auto components to automobile.
I didn't understand the question.
Which sectors in small and mid cap seems to be good prospective in the next couple of years?
It's the same sectors: manufacturing, engineering, auto ancillaries, chemicals, real estate, banks.
Customer is also asking that supply of these products, like mid and small will always get supply, like automobile. Small and mid cap sectors will give it to the large cap. Like that, is there that dependency is going to be there in small and mid cap sectors? Suppose imagine if auto doesn't do well, their mid cap and small cap also will not do well.
Of course, yeah, that's right. But
Yeah.
I think a lot of engineering companies or auto ancillary companies are not dependent on Indian auto sector only. And there is a lot of today, a lot of momentum and a lot of interest from the export markets for these products. And a lot of companies are actually growing pretty well in the export market. In the export markets also, there could be slowdown, but the Indian manufacturing companies are taking market share. today. Given the geopolitical scenario and China plus one movement, I think Indian manufacturing is also getting some advantage out of it.
Okay. There's another question here, Rahul. We have 2024 general election. PSU banks are pushing for SME loans. What is your view on this?
I think not only PSU banks, even large corporate sector banks, large private sector banks are also pushing. So I don't want to only say that PSU banks are pushing for it, and SME is an important part of the economy. And so far, their quality of those assets is holding up well. See, it takes 2-3 years of strong growth for the NPL cycle to build again. So right now, I don't foresee any major risk on the MSME side. Mr. Reddy, can we take one last question? I have another call.
Yeah. What is what is the expense ratio of this particular fund? Is the last question. I think this one.
I think my marketing people would be able to.
Yeah,
manager
sir,
would
we
be
will
able
get
to
back
pick
to
up it.
you. Yeah, we'll get back on this particular bit. And I think more or less we are done. There's no one second. Huh? I'll just see is there any other questions. Yeah, I don't think it is there. Yeah, I don't think any question is there. Thank you so much, Mr. Rahul, for your time and patience in answering all these questions and answers. And thank you to all the clients who has joined and taken time for this to listen from Mr. Rahul, his views on markets and why Tata Multicap and why at this market level, and how does he wanted to construct the portfolio and build over a period of time. Thank you so much. Thanks, Mr. Rahul.
Thank you, Mr. Reddy, and thank you everyone for dialing in. Thank you.
Thank you so much.